Chinese stocks, too risky or huge opportunity to make big money? Alibaba, BYD, and NIO all crushed in share price, billions of dollars of values lost. Is it time to buy the dip, or is it just too risky? Today we're going to talk about why Chinese stocks drop a lot, what are the opportunities and the risks, and whether you should dive into it now or stay far away. Let's look into that. If this is the first time you're here, my name is Eric. I've been investing since I was 18 years old for more than 20 years. Yeah, I know, I look a bit younger, right? Anyway, I invest in all kinds of things: stocks, bonds, mutual funds, ETFs, warrants, options, even watches, you name it. In this channel, I want to give you unique insights about investing in Chinese stocks listed in the US, and also with 200 plus I own business ideas. Remember, subscribe so that you're not going to miss out. First and foremost, why are Chinese stocks struggling a lot in the past few years? There are three main reasons. First is regulatory crackdown. China has been tightening its grip on private businesses for a few years already. Technology giants like Alibaba and Tencent were hit with massive fines, and entire industries were being wiped out overnight. We're talking about private tutoring or for-profit education. That's why investors were a bit nervous since then. The second reason is China-US tension. The delisting risks of Chinese companies listed in the US are real. For example, Didi was delisted in 2022 amid the tension between China and the US. So both Chinese government and US governments do not want the Chinese companies to list in the US for different reasons. So that's why the listing risks of Chinese stocks listed there are real. The third reason is because of weak consumer sentiments. The post-pandemic economy was growing slowly and consumptions are going down. Foreign investors are also less interested in investing in China nowadays. Well, after all, no one wants to be the last one in the musical chair, right? So this is challenging. What do you think about these concerns? Are they valid or they're just being overblown? Leave me in the comments below. Okay, we know about the risks. Are there any buying opportunities? Actually, yes. The first reason is that the valuation is insanely low. We're talking about Alibaba or other tech giants with PE ratios hasn't been seen since 2016. And they are all much lower in terms of price to earnings ratio comparing their US counterparts. If you believe in value investing, this is actually once in a lifetime opportunity to capture the growth. The second opportunity is that the tech giants in China are still dominating the markets. Alibaba is still dominating the e-commerce space. Tencent is still dominating the gaming and also social media space. Baidu is investing a lot in AI, and also they are the dominant search engine in China, which is the biggest market in the world. So there are still great opportunities, they're still leading the markets, why not? The third reason of opportunities is the Chinese government may actually step in. As we know, there are stimulus packages already being rolled out by the Chinese government, and there are anticipation that more will be coming out. And this can boost investor confidence. If you think that Chinese stocks is a buy now, type bullish in the comments. If you think that the Chinese stocks are too risky now to buy, type bearish in the comments. I want to hear your take. Okay, don't get too excited yet. There's still some serious risks to consider. First of all, regulatory risks. So the regulatory crackdown has stopped, yes, that's true, but the policy in China is sometimes quite unpredictable, to be honest. So an entire industries, like the tutoring industry could be wiped out overnight, literally. So if you are comfortable with this kind of uncertainties, then of course it's fine for you. The second reason is that the delisting risks of Chinese stocks listed in the US is still pretty much real. You never know what Trump is going to do next in the trade war. So even though many of these stocks already have a dual listing in Hong Kong Stock Exchange, for example Alibaba, but the risk of panic selling is still there when they're being kicked out of Nasdaq or NYSE. The third risk is, will investors in the US trust Chinese stocks again? The growth is sluggish as we mentioned. Are they going to change the sentiments and say, we are confident in this growth story again? This is an open question. So, Chinese stocks, is it still too risky or time to buy now? Leave me in the comments below. Alright, here's the bottom line. If you have a long-term view, you have patience, then I think some of these Chinese stocks could be a really good bargain to buy now. However, if you're just looking for short-term gain, there is a lot of volatility and uncertainties. Either you can make a lot of money or you can lose a lot of money. So, if you're the former, you have the long-term view and you have patience to get the bargain now, then you should subscribe because I'm going to do deep dives into a number of stocks later. And remember to hit the like button because this can help us to continue to make more videos for you guys, have more deep dives, giving you unique insights and alternative views about investing in Chinese stocks. Thank you and see you next time.